Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets. Starting off with advanced tech, where we've got this situation where there's not much of a chart, obviously, but we've got known quantities here, which are the persistent support there at £1.20, and a possible rising trend channel on the daily chart here up towards £1.45. Be cautious on the shares, which you may very well be. Then you'd wait for at least an end-of-day close above that mid-April peak for the shares, which was around the £1.27 level. If you're even more cautious, probably wait for a break of the opening range, which was up to £1.33. But I think 127 plus should do the trick. And anyway, while we're above 120, that price channel remains in place, and 145 is a potential target perhaps by the end of next month. Onto a stock which I know is highly followed and liked by many retail investors, VACTA. Here it looks like we're getting a key reversal to the upside off a 50-day moving average there, and also off the floor of the rising trend channel, 50-day line there at £2.40 in blue. Rising trend channel here, very impressive actually. It's been in place for a long time now, back in mid-November. And the pièce de la résistance is the way that we've had two gaps to the upside in the recent past, one in February, that remains unfilled. And then another one in March, which was filled, but there was a bounce off the bottom of it, so that's almost as good. The view here is that while there's no end-of-day close back below the 50-day line, £2.40, then 350 could be the target as soon as the end of next month. RSI right in the correct zone there in the low 50s, so just on the right side of neutral 50, and that tends to be the position from where rallies can start. Onto a stock which is pretty new to me, or not so familiar with to me, which is ECSC. Here we've got a great-looking chart when it appears on the screen. We have had earlier this week a gap to the upside, as yet unfilled, and we've had it's the third day with the unfilled gap, so that's probably enough to convince people that will remain unfilled over the near term. And unfilled gaps through resistance, especially when it's been a long consolidation, tend to be quite reliable signs that a new trend is about to begin. On the upside here, of course, end of day close or a weekly close today above 83p should seal the deal on a potential move up towards as high as £1.80 over the next 2 to 3 months. That is a resistance line there from the beginning of 2019 and marks the top of a rising trend channel, which I've just filled in now. So very exciting, I suppose, from a technical point of view in terms of whether the shares will, after that that sort of roadblock that we've had for the last over a year, the logjam will break, and then we will see a decent push to the upside, perhaps like the one we saw in December 2019. On to another punter's favourite, Ferro Alloy, which is a company which I think I interviewed a while back, and the shares have been consolidating ever since, maybe trying to recover from that, but rising trend channel here. The floor of the channel really level with the 50-day moving average at 28. Nice that the shares were too strong to actually touch the 50-day line, so that's a plus point for the shares. And the top of the channel, while the 50-day line holds, is as high as 59p, and that could be seen as soon as the end of next month. So pretty strong setup there for Ferro Alloy at the moment. I suppose if you're fussy, you might want to see the shares just break the 20-day line or break late April resistance at 35p on an end-of-day or a weekly close basis, but this looks like a pretty strong situation. Another strong situation, which is one I covered, I think, a few days ago, but too good to resist looking at it again. We had an unfilled gap to the upside for Frontier IP. The support since then has been at the top of the gap and also at the old resistance of 80p, so looking very strong indeed. And that point backed up, by the way, there's been another gap to the upside today, and so that might be a double signal for an upside move. Target here initially up towards £1.10 by the end of this month, and the way it's going, it could be by the end of next week, but let's see how we go there. While we're above 80, looking to £1.10 for Frontier IP. On to a stock which I haven't looked at for quite a while, largely because it's been on the back foot, let us say. Innova Derma, and here it's interesting that we've got this falling wedge. We've been sort of scraping below the old support there at 38p for February and March, and end of day close back above 38p should be enough as a bear trap rebound for the stock, also breaking the 50-day line at 41p and that resistance line there from January would be helpful to the cause today or early next week. Initial target up to 52 pence at the 200-day line, but the second target, maybe by the end of next month, up to the top of the gap from January at 63 pence. So above 38 pence, looking to 63 pence, and obviously the stop loss back below 35, which was yesterday's low for the shares. Another good performer, with quite a lot of sort of more obscure stocks doing well at the moment, which may be a good thing, maybe a sign that the market is getting more bullish. Here we've got Litigation Capital with a rising trend channel from back in July, heading towards £1.20. That could be seen sometime this month, maybe in the next couple of weeks actually. The old high there from March at 96 pence, so while we're above 96, looking for 120. If you're a fan of the shares and want to dream of greater highs, then a rather steeper line of resistance there from back in July last year, up to £1.70 could be the 2 to 3 month target for the shares, maybe as soon as the end of next month. Another stock which used to be a favourite but went quiet on us, went sort of bearish on us, is Nanoco Group. In fact, here we've got a rising trend channel which has been in place since July last year. Top of the channel heading towards 45 pence, maybe a bit more actually. That's not quite parallel with the support line that we've had, so maybe call that up to 50 pence. And that target valid while we hold above the 50-day moving average and former resistance around 22 pence. So above 22 up to 50 for Nanoco. Time frame on that by the end of next month. And if you're cautious and just want a momentum trade, then obviously an end of day close through last month's high at 30 pence would be the trigger on that particular situation. Going the wrong way around in the alphabet, back to Metal Tiger. Wrote it the wrong way around in my list. Here, a beautiful breakout. I think I covered it before, recently in the last few days. But anyway, we broke that resistance line there from December, and a solid green candle today, heading for the top of that rising trend channel from March last year, as high as up to 39 pence by the end of this month. And I suppose if we're really lucky, by the end of next week. So looking pretty strong there at Metal Tiger at the moment. Just 3 stocks to go now. First is Tech Capital, where there's been a lot of decent news flow, interesting news flow from the shares. And one of my favorite setups here is a gap close, which is a gap down, which is then there's an end of day close above the top of the gap, which hopefully we'll get that today. So 14 plus today, closing that March gap to the downside, could then deliver up towards 24 pence, which is a June resistance line projection. Time frame on that as soon as the end of this month, I would suggest, given the way that we've closed that gap. That's usually a pretty good signal in the sense that it shows that the bears have been caught on the hop. A couple of stocks to go, as I would have indicated, or I did indicate a second ago. Here we've got a stock which has been, bubbling higher for quite some time, ULS Technology. The big plus point here is, again, we've got that favourite setup of the gap through the unfilled gap through resistance. We've held that gap on multiple support points, and also been consolidating for the best part of 6 months. So the shares should have digested any sellers in there. Above 80 pence, we're looking for as high as £1.30, perhaps by the end of next month. But we're sort of on guard now for the shares to start accelerating to the upside. This stage only really back below the 200-day moving average and the floor of the channel at 72 pence, really delaying the upside scenario. But we should really remain above 80 and ideally above the 50-day moving average at 84 pence. Finishing off with a rather more quirky selection, valarix. Here we've got a situation where there's been the shares have been sort of what we describe it, sort of consolidating for quite some months now. We had a little dip down yesterday towards 18.6 pence. And that's a narrow bear trap. I suppose previous lows there around 19. So narrow bear traps tend to be just a final flush out of weak bulls. And it looks like with today's solid green candle that we've got potential move to the upside. Given that we've had a few false dawns from the beginning of March in terms of the upside, might be better to wait for at least an end of day close above the 200-day moving average, or even that last April peak at 22.4 pence before assuming that the shares will head back up towards 30 pence. But this falling wedge that we've got here and the potential breakout should cause the shares to motor, as we know that they have the ability to do. That's it for me today. More updates on Monday.